Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Glad you're able to join us after this Memorial Day weekend is over in the U.S. It's our first day back. I will tell you this is the second time I'm recording the video, so typically I don't have lines on the charts, but since I've already recorded the video once and now I got to start all over again because I recorded the wrong screen. That's what happens when you don't pay enough attention and you've got two monitors. I recorded a screen of nothing. So I will have some lines already put in. I typically don't like to do that. Those of you that watch the channel on a regular basis know that I only like to add lines or remove lines during the videos so that you can see how trades develop over time. If you are new to the channel, do me a favor, click the subscribe button down below. And if you enjoy these videos, do me a favor, leave some comments, leave a like on the video. Those kind of things actually help the YouTube algorithm so that I show up more often on more people's feeds. So the more you can comment and like, the more it really helps us out so we can spread the message, if you will. So let's go ahead and dive right in. So starting with the S&P. Now what's happening in the overnight hours is we've gotten a little bit of a European bond crisis, if you will. The Italian government is freaking out and it's scaring the European markets, I guess is the best way to put it. So we are down about 17 points in the pre-market trading of the ES. However, that 17 points mostly happened before the European markets opened. At the open of the European markets, we've kind of stabilized and just chopped along sideways since then. That being said, the origin of that move down, there is, I think, going to be a potential reversal up there. Now, I did take this level here, which we've already had, and change that to a reversal trade because I want to see if price can come into here, but I don't want to get long until it breaks out above there. And I think that would be, wait for it to come into the level and then get long as it comes back out. Now let's take a look at our breakout trade is still in play up above this 2742. I really thought there was a chance we would get there Sunday night when the markets opened on Sunday. I thought, well, maybe we can pop up and we can get there, but after the holiday, we were unable to break through. That just frankly makes this a better trading opportunity going forward because we fell from there again. So I think when we do break out above there, it'll still be a valid long. NQ, we've got the same short setup, 69.68 by 69.80, so right in this range here on the hourly chart. We did find a little bit of support right here at this juncture. Let's see if that continues to fall. We may get a reversal right through here. I don't have a trade set up around there because that's just a retest of this area here. And so that's kind of a retest of this, which is a retest of this. And they're all kind of retesting one another, which makes them fairly weak levels. So I'm not comfortable taking a long on any of these in the NASDAQ. I like it better in the S&P. Crude oil. So looking at crude oil, now unfortunately I deleted the level, but we had an area in crude oil from back here, back in this region. Wrong tool there. There we go. So we had an area in crude from back in this region way back. And that's actually where we've bounced off of and started to come back up. Now, if you took that long, you are being rewarded just a little bit. Not a huge move has come out of there yet. On the hourly chart, now that's a fairly wide area. On the hourly chart, that area, let me tighten this up a little bit. There you go. On the hourly chart, that area, this pivot down here, this is, about a 50-cent wide area in the crude oil, which is wider than what a lot of people are comfortable taking. And you moved up about a 2-to-1 reward to risk from there at this point. Now, I'm not in love. I can't use this one again. I'm not in love with this area for a short or this area above it. I'm also not in love with this for a breakout long. Why am I not? If I don't like the short here, why don't I like the breakout long? Well, if you remember our breakout rules, rule number 1 is that I've got to have room to roam. Well, I don't have room to roam because I got this level up here and I got this level right here, all of these above it. So I'm going to leave these be at the moment. Now, if we break out above this one here, this 67.98, then I'll be more apt to buy on a pullback. So you might want to go to a 15-minute time period and look to see if you get an entry on the small time period. I'll be looking at that one throughout the day, and if something comes up, I will tweet out the response. Gold. So in gold, we've got this area here, which is our short. Did not quite make it there in the overnight hours. And I've got this reversal point right here if price does indeed make it back to this region. So taking a look at the bond markets in the overnight hours, we had price almost make it up to our reversal point. Not quite there yet. And that really leaves us with a conundrum when it does come back to this region. Is this going to be an area that I'm going to want to get short? It still, I think, is a pretty good area. If you look at this wick over wick here on the 4-hour chart, on the 1-hour chart, it shows up as this little bit of basing before a pretty strong drop. I still like this area. Not going to take it off the table. And frankly, if you are still long from the breakout above this blue line, now most of you, I'm guessing, are not still long from that breakout because you're going to close it out over the weekend, especially on a contract rollover. But it gapped down, and now we are trading significantly higher. So you might want, if you're not in this thing yet and you like it, you think you want to get in on the long, you've got a little bit of a reversal point here. I'm going to leave this line off the chart. I'm not in love with that area, primarily because it was formed at midnight, 10 o'clock at night. That's not a great time of the day for high probability levels. Really, in my currencies, I've got nothing to write home about today. So in the Aussie, I've got nothing that strikes me that's kind of sticking out. I didn't get a chance I didn't record yesterday, but looking at this on a 4-hour chart, you'll see that there is a pretty nice triangle breakout that happened here on the Aussie, which would bode it to continue to fall. And so then you might want to look for a reversal trade back up on the hourly chart. So if on the hourly we get a decent reversal, well, we already had one to this area right here. And this area got tested once, and now it's moving down from there. So I'm not a huge fan of it at this point. You can do candle-to-candle style of trading, meaning from this point, if I get a reversal and I get a lower low on a chart, then I can take the next, the trade if I get a lower low. I don't have that yet. You'd have to really dive down to the 15-minute chart, and there's really not even anything on the 15-minute chart that I love. So when that happens, if I feel like I've got to keep going down in time frames to find an entry, then that means it's not a good enough entry for me to take it. Keep that in mind. If you've got to keep going down in time frames to find an entry, the entry's not good enough to take. Looking at the euro we broke out from this area down here. Now we have come in the euro to a big area that we had identified quite literally months ago. We had identified this on a weekly chart months ago as a place that I thought that the euro would get to. Now we came really close once, popped back up out of there, but we didn't get rid of the level. The level is still valid. So since that level is still valid, we've now come back to it. Let's see if we see some strength happening in the euro off of this little area. Now, why do we think that there could be some strength here? Well, because this served as resistance in the past, has a chance to act as new support. So this is on the weekly chart. This is much more for the investor mindset. If you're more of a trader, you're probably not buying down here. Right? You may want to short it when it gets back up to here, but if you're more of the investor, then you're going to wait till you get a higher high and catch that reversal. Looking at the Canadian dollar, we still have a breakout below us in the Canadian, below this region here. We are not quite to there as of yet, and so there could be a chance for a reversal on the hourly, although once again, I feel like I'm kind of forcing it. We are coming to this region here, this little spot right there, where we could reverse. So maybe a candle-to-candle style of trade from this point on would be not a bad idea. Get short on a lower candle's low. Great British Pound, Japanese Yen. So in our Great British Pound, we are still in between our regions as the pound is just continuing its fall. And really that's the strength that we're seeing in the dollars is really what's causing all of this. But the pound is continuing its move down on a weekly chart. Here's where our area is going to be for a potential reversal. You see that much more clearly on the daily, where we have that little bit of sideways price action before a very strong rally higher. And there's continued room for it to fall. And so If Charlie were here, he would tell you that it's going to fall until it runs into a new floor, and the floor is where things stop falling. So that tells me that I'm going to be much more apt to be a seller than I am to be a buyer. So when I look at the hourly time period, I look for a rally back up to a good opportunity. And so if I even, in this one, I'm not searching for a better opportunity. I do see it. It's right here, this little bitty area here, which is a wick over wick level. And if I move that down to 15 minutes, it'll be easier to see. This area right in here. Now, the other thing about this is right around at the European Open. So keep this area in mind as a potential reversal. I'm going to change the color here so that we know that it's lower probability because it is on the 15-minute chart. But don't be afraid to let this one run for a while. If you get short here and it starts to go your way, don't bail out of it right away. Don't just immediately bail out of the trade when you get a little bit of a 2-to-1 profit. Allow that thing to run because there's room to roam. In the Japanese yen, so in the Japanese yen, we had a potential breakout above this blue line, and we definitely would have, if you set up the trigger, you've gotten filled on this. And so it's not yet hit the stop. The stop would be below this pivot right here. But it's not looking good, and you may wind up getting stopped out on it anyway. So my guess is most people probably didn't have that trade set up, being as how it was a holiday weekend and it was in the overnight hours. I will tell you I did not, but it is still kind of following the rules. And if you get stopped out on that one, then you get stopped out on that one. They're not always all going to work, but just keep that one kind of in mind. Copper, still really nothing in line in copper. And then nat gas. I don't really have anything I like in nat gas until way down here. So nat gas, in my mind, none of this is enough to convince me to be a buyer until I get way down into this region there. All right, so as far as today goes, if you have any questions, please feel free to shoot me an email, chuck@iiefinancial.com. And thank you so much for listening. Once again, if you've got anything that you want to add to the video, the more you can fill out on those comments down below. Give me a like, share the page with others, and subscribe. That would be much appreciated. Talk to you all soon. Have a great